Today, I'm going to let you in on one of my best kept investing secrets, a little known ETF that can make you some serious money while giving you access to some of the biggest and the baddest companies in the US. And the crazy part is that most people have never even heard of it. If you've ever wanted to invest in companies like Nvidia, Amazon, Tesla, and Apple, plus others, but don't have thousands of dollars lying around to invest, this ETF I'm going to tell you about is about to be your new best friend.
We getting money, money, money. When Jameer sharing gems with her getting money, money, money. Getting a line, growing money and time. Getting money, money, money. It's your life, trying to give more life. Getting money, money.
My secret ETF that I'm going to tell you about today is called TOPT, and that is the iShares Top 20 US Stocks ETF. And trust me when I tell you, it is an absolute game changer. By the time we finish today, you're going to know, 1, why TOPT is one of the smartest and most affordable ways to invest in America's biggest companies. 2, how much it would cost to buy these stocks one by one versus just buying TOPT. 3, how TOPT has performed since its launch and how it compares to its holdings. 4, why it's still flying under the radar, but it won't be for long. And 5, why you need to grab it now before the price explodes. First things first, what is TOPT? TOPT is an exchange-traded fund, or an ETF, that holds the 20 largest publicly traded companies in the entire United States. These companies are powerhouses of the American economy, the ones that drive innovation, lead the stock market, and consistently make billions of dollars every single year. Now, why does that matter? Because investing in each of these companies individually is crazy expensive. But with TOPT, you get access to all of them in just one single purchase at under $30 per share at the time that I'm making this episode. And here's the kicker. TOPT was just launched in October of 2024, so it's a pretty new kid on the block, but it's already been showing steady growth. And that reflects the incredible performance of the companies that are inside of it. Now let's talk about what exactly is inside of TOPT. Like I said before, this particular ETF holds the 20 largest companies in the entire country. These bad boys are the most successful companies in the US. And some of those companies include Apple, Nvidia, Amazon, Tesla, Berkshire Hathaway, Meta, which is Facebook and Instagram, JP Morgan Chase, and Eli Lilly, amongst others. Because these 20 companies in this ETF are the biggest in the whole country, they are literally the foundation of America's economy. Think about it. Apple dominates the smartphone and tech market. Microsoft is absolutely running the software industry and leading in AI. Nvidia is killing it in AI chips and gaming. Amazon, you know, they're basically running e-commerce. And Tesla is pushing electric cars into the future. Now, like I said, the companies that I just mentioned are just a sample of the overall ETF, which again holds 20 companies. But here's the thing, if you had invested in any single one of those years ago, you'd be sitting on some serious wealth right now. Okay, so how much would it cost to buy each of these stocks individually versus how much it would cost to just buy TOPT? Let's break it down. If you wanted to buy each one of these companies individually, here's about what it would cost. Apple is currently trading at over $230 a share. Microsoft, over $400 a share. Nvidia, over $130 per share. Amazon, over $230 a share. And Tesla is over $320 per share all by itself. If you were to buy a single share of each of the companies in the TOPT ETF, you'd be spending almost $3,000 just to own one share of each of those 20 companies. But with TOPT, you get to own all 20 companies for less than $30 per share. This is the power of ETFs. Instead of spending thousands of dollars trying to buy all of these stocks individually, you can own a piece of all of them for a fraction of the cost. It only makes sense. Now, let's talk real numbers. Since launching in October of 2024, TOPT has already seen incredibly positive growth. And that's because the holdings or the companies in the ETF are continuing to climb. To put this into perspective, let's compare it to the growth of the biggest stocks that are in this ETF over the past 5 years. In the past 5 years alone, Nvidia has had 1,800% growth. Tesla has had 564% growth. Apple, 186% growth. Microsoft, 122% growth. Now, obviously, TOPT is not going to have as fast a growth as a single stock of, say, Nvidia, because it's so diversified. In addition to, say, Nvidia, it includes 19 other stocks. But when every company inside of this ETF is winning, guess what happens? TOPT is going up. So let's do some math based on historical performance. I love money math. I wasn't like a math genius in school, although I did get decent grades, but when it comes to money math, no, that's my jam. And I also like to focus on facts and not feelings. The stock market is oftentimes driven by emotion, and that is not the way that I want you to move. I want you to move based on historical data and future predictions that make sense based on that historical data, not emotion like everybody else does. This is why a lot of people end up losing money in the stock market. I don't want that to be you. So let's do it. I'm going to now compare TOPT to a tried and true ETF that I love. And if you've been following me for any length of time, you know that I love VOO. So we're going to compare TOPT to VOO based on VOO's historical performance and what TOPT might be able to do based upon that. All right, VOO has been one of the best performing ETFs for long-term investors. It tracks the S&P 500, meaning it holds the top 500 companies in the United States. But here's where things get interesting. When VOO launched in 2010, it was trading at about $100 a share. Fast forward to today, and as of the time I'm making this episode, it's trading at around $560 a share. That's 450% growth in a decade and a half. Wild. That means that had you invested $10,000 in VOO in 2010, it'll be worth about $55,000 today. Now, I believe that TOPT will outperform VOO in the long run, and here's why. While VOO tracks the top 500 companies, TOPT is laser focused on only the top 20 winners. These are the best of the best, the creme de la creme, the bee's knees, only the top shelf. So in VOO, you own both the big winners like Apple, Amazon, Tesla, Nvidia, Microsoft, etc., and the companies that are just doing okay. With TOPT, you're only getting heavy hitters, the ones that are actually driving the market. Now, when it comes to VOO, historically, the companies in the S&P 500 outperform the rest of the stock market, which is why VOO beats the average stock market return. Now, VOO gets about 14.7% returns annually. That's almost 15%, while the overall stock market has only gotten between 8 and 10% on average. Remember, our goal is to always beat the stock market average, because I'm not waking up every day to be average. I'm waking up to be extraordinary. And if you are watching this on video or listening to this on podcast, you are doing the exact same. So that means we are only going to be investing in the top of the line, okay? Because we're trying to get those extraordinary returns. So imagine an ETF that only focuses on the most dominant players. That's exactly what TOPT is doing. Now, I'm a basketball fan, but I'm not a basketball historian. But stick with me with what I'm about to say. I'm about to give you an analogy that I think will really seal this deal for you. Think of VOO as an NBA team that has a roster stacked with the best players that ever lived and also some okay players and a couple like not so great players, right? So like you've got the Michael Jordans, you've got the Allen Iversons, you got LeBron James, you've got, Steve Nash, you've got Luka Doncic, you've got, all the best players, right? And again, I'm not here to have a debate about basketball, right? I just want you to stick with me and just follow me with what I'm saying here, okay? You've got all these great players, and then you've also got some okay players, right? Like you got some people who can hold their own, but they're not like the best of the best of the best of the best. And then you've got a couple people who are just kind of like, okay, like they're the benchwarmers, but in case the A players ever get tired or are out sick or have a broken Achilles heel or what have you, you've got the B players and the C players who kind of come in and play the game. And that means that sometimes you're going to win some games and sometimes you're probably going to lose some games too, because you don't always have the A players. Right? Now, let's take TOPT, for example. TOPT is that same NBA team, but is only stacked with A players. Only stacked with A players. There are no B players. There are no C players. Definitely no D, E, or F players. So you've only got the best of the best of the best of the best playing in this game. Again, you've got the Michael Jordans, the LeBron James, the heavy hitters, the people who are, the Steph Currys. Again, the best players ever are all on one team. You've only got winners, and therefore you're bound to have a winning team that's more likely to win every single time than you are if you've got a team full of the best players, but also they've got some not so great players on the team as well. That's how I want you to think of VOO versus TOPT. That's not to say that VOO isn't a good team, right? But TOPT is probably going to be better. So back to talking strictly about stocks. If VOO turns $10,000 into $55,000, TOPT naturally has the potential to do even better, especially as these top 20 companies continue their market dominance. Don't you want to put your money where the real winners are? Now, since we already looked at what VOO did over the past 15 years, let's look at where TOPT could be in the next 15 years based on historical data and not just market speculation. Okay, so VOO has grown on average 14.73% per year over the last 15 years. Now, don't get me wrong, VOO is nothing to sneeze at. The stock market overall has about 3,450 companies in it, and VOO only holds the top 500 of those. But TOPT only holds the top 20 of those 3,450 companies. meaning it eliminates all underperformers. And that's why I'm predicting that it has the potential to outperform VOO. Based upon this, we could conservatively but reasonably assume that TOPT would do about 20% better than VOO. So if it does 20% more than the 14.73% that VOO already does, that means that TOPT could do about 17.68% annually. So here's the math on that. We've got 14.73% for VOO's annual return. We're going to multiply that by a 20% multiplier, which is 1.2, and that gives us a potential annual return for TOPT of 17.68%. As of the time I'm making this video, TOPT again is trading for less than $30. In fact, it's actually trading at about $26. So at that growth rate that we just did the math for, TOPT's current 26 per share price could hit approximately $304 per share in the next decade and a half. So let's talk about why this makes sense. Historically, the top performing companies carry the entire index. For example, the Magnificent Seven, which are the 7 biggest companies in the country, and at the time I'm making this episode includes Apple, Microsoft, Nvidia, Tesla, Amazon, Meta, which is Facebook and Instagram, and Alphabet, which is Google. Those 7 companies alone were responsible for over 70% of the S&P 500's gains in 2023. That means that the other 493 companies were either performing less than they were or might have been underperforming altogether. So if you cut out the dead weight like TOPT does and only hold the best stocks, your portfolio is likely to grow faster than the S&P 500 as a whole. This is why TOPT could easily outperform VOO in the long run, and why that 20% or that 1.2x multiplier is a reasonable assumption based on historical data. So what does this mean for you as an investor? If TOPT goes from around $26 now to $304 per share with compound interest, that will be a total return of approximately 1,049% in 15 years. I'm telling you, this is a play where you want to buy as much as you can right now and just hold it for the long term. Because that means a $10,000 investment today could turn into over $114,000. That is insane growth for simply holding onto an ETF that only tracks the biggest winners in the market. And this is why I believe that TOPT could become one of the best performing ETFs of our generation. Remember, TOPT is currently trading at under $30 a share as of the time that I'm making this episode, right around $26. This is dirt cheap for access to the top 20 companies in the United States. Now let me ask you a question. Do you really think that Apple, Amazon, Nvidia, Microsoft, and Tesla are going to be less valuable in the future than they are today? Nah, these companies are not going anywhere. They're only going to keep growing. The price of TOPT is going to skyrocket, as I showed you. Now, the last thing you want to do is be sitting on the sidelines while you watch this ETF go from less than $30 a share to over $300 a share while you're still thinking about it. Think long, think wrong. Over the next 5, 10, 15, 20 years, this ETF is going to grow, just like VOO has, but at a faster, bigger rate. Now, if you stay to the end, comment TOPT in the comments to let me know that you stuck around, and I'll be sure to respond back. If you found this valuable, please like, comment, subscribe, and hit the bell for notifications. And tell me in the comments, how much TOPT are you going to be buying? That's all for today, rich friend. I'll see you soon. Bye for now.